Today we are talking about Australian Premium Solar India Limited's latest financials. So let us start. Okay, here we have the financials for first half of fiscal year 2026. Now H1 means first half, which means quarter 1 plus quarter 2 combined. Australian Premium does not release quarterly results. So quarter 1, quarter 2, no. The first two quarters are combined. Okay, two quarters are combined, the first half and second half. So in first half of fiscal year 2026, the company reported revenue or total income of 302.93 crores. Massive growth from last first half fiscal year 2025's 161.24 crores. Okay, massive growth. EBITDA grew from 19.51 crores in H1 fiscal year 2025 to 43.28 crores in H1 fiscal year 2026, with the EBITDA margin increasing from 11.88 to 14.29. Finally, profit after tax grew from around 13.08 crores in first half of fiscal year 2025 to 28.6 crores in the first half of fiscal year 2026. So profit after tax more than doubled. Okay. The margin, the PAT margin also increased from 7.9% to 9.44%. Okay. So in terms of earnings, massive growth. Then revenue bifurcation. Okay. 165 crores of revenue, 165 crores of revenue came from wholesale sale of solar modules. 33.8 crores came from retail directly to customers, and 102.89 crores came from selling pumps or installing or selling solar pumps. And these are the states where they're located. You can see quite a number of states are there. Now we discuss the earnings. Let us talk about future growth. So for future growth, let us see the base right now. Okay. 800 megawatts is the current manufacturing capacity of the company. All right. Keep that in mind. 800 megawatts. Growth. Okay, pathway to success, growth. First, there's CAGR, you can see they have a projected growth rate of 75% for fiscal year 2026. So you take the revenue in fiscal year 2025, they're saying 75% growth in that revenue for fiscal year 2026. Then solar pumps are expected to contribute 35 to 40% revenue by fiscal year 2026. In 2023, 2022, solar pumps revenue was in single digits. The contribution was in single digit percentage. So solar pumps expected to contribute way larger. Then they're expanding their manufacturing capacity by an additional 400 megawatts. So 800 megawatts right now, expanding by additional 400 megawatts. Then geographic expansion. They're moving beyond Gujarat and expanding to new markets like Maharashtra, Haryana, Jharkhand, Rajasthan, Tripura, Bihar, and others. And finally, we have their financial strategy. They're currently net debt-free status. What is net debt? Net debt means total debt minus cash and cash equivalents. Okay, total debt minus cash and cash equivalents. So net debt-free means the cash and cash equivalents and the total debt almost the same, which is a very good thing. And it aims to maintain low debt levels. Nice, 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 nice. Moving on. Okay, let's cover more of the growth rates. Strategic expansion in solar cells. So they currently manufacture solar modules or solar panels. Here's a photo of that. Solar cell is a component, okay, for solar modules. So it's a kind of backward integration. So let's read. In quarter 4 fiscal year 2025, the company announced its expansion into solar cell manufacturing with a planned 4 gigawatt TOP PON solar cell facility in Gujarat. So 4 gigawatts. The project will be developed in three phases. Three phases, starting with 1 gigawatts to be operational in the next 18 to 24 months. So 1 gigawatt out of 4 gigawatts, 18 to 24 watts, and remaining 3 gigawatts will be added in subsequent phases at 9 to 12-month intervals. Okay, the first gigawatt, 18 24 months, remaining 3 will be in two phases of 9 to 12 months intervals. So it's a long-term project, around 4 years is the timeline. The first one, the first phase, the first gigawatt phase, when it's completed, it's expected to generate 650 to 750 CR in revenues. with EBITDA margins of 25 to 30% in the first year. So 18 to 24 months is a timeline for first, and when it's developed, it's expected to generate. It will take some time to fully be utilized. The capacity will take some time after the entire thing is operational, but 650 to 750 CR in revenues with margins of 25-30%. We saw the current EBITDA margins. They were currently around like 11%. So massive growth in profitability, even higher than that of basically the revenue, higher growth than revenue. Then, yes, there 400, the 400 megawatt installation that we discussed earlier, the addition of modules, that one, that 400 megawatt installation is expected to be completed by fiscal year 2026. We are currently in the third quarter of fiscal year 2026, so it's pretty close. And commercial production is expected to begin by quarter one, fiscal year 2027. So close. And finally, we have the consolidated balance sheet of the company. Here we will talk about H1 fiscal year 2026. Long-term borrowings of 31 crores. Then we have some deferred tax liabilities. Okay. Short-term borrowings of 0.31 crores. This much is the debt. If you're wondering what are trade payables, this is the money the company owes to its suppliers after the suppliers have already given them the raw materials and the components, but the company has still not paid them back. Okay, they get a credit term, meaning they can pay for their supplies after some time. On the asset side, fixed assets of 67.95 crores, big growth you can see. Cash and bank balance of 25.94 crores. Inventory, which means raw materials plus finished goods available for sale plus goods still being made. Okay, in progress, 38.70 crores and trade receivables of 98 crores. Massive increase. This is the money that Australian premiums customers owe it after the company has already supplied them the product. So of course, what do you say? The customers also get a payment term, meaning they can pay after a particular period of time. Just like how Australian gets a term for payment term from its suppliers. And short-term loans and advances given to maybe its subsidiaries and all of that, 38.49 crores. That is it. Uh, That is it. Yeah, that is it. The company is projecting for massive growth, 75%. Let us see how Australian Premium manages its expansion and if it can continue this massive growth plus profit growth even higher than revenue growth. So that is it. Bye.